I think we can get started with a bigger picture question, because if there's anything that's really clear out of this CES, I think, is that real move into embodied or physical AI, so the integration into devices now. But how does that actually work for Tuya Smart, and what is your place in the ecosystem as well?
Yes, and thank you for having us, Anna. So Tuya, what we offer is we're running as an AI cloud platform and open the toolkit for any type of hardware developers all over the world who want to design any type of smart devices easily and efficiently. And so through that, we're building developers ecosystems, connecting the manufacturers, the design houses, the engineering, and brands and distribution channels together.
So it's essentially about enabling IoT, or Internet of Things, and devices. So where are the companies that you're working with? Where are they from? And what are the sorts of geographies that you're targeting? Because obviously this is really a key market for Chinese companies that are looking to get exposure to the US and other parts of the world.
Yeah, so for us, is that we're kind of like the really global footprint all over the world. So right now, we help the brands all over the world. Over 7,000 brands come from over 100 countries out there. And behind them, there will be manufacturers cover over 12 countries. So we're working with every single hardware manufacturer basis all over the world right now.
What's the consumer adoption look like? Because I think this is obviously a very specific audience that comes to CES and is really interested in being, I guess, on the edge of these devices. But for the everyday consumer, where are they at in terms of adoption of AI?
Yeah, so for us is that, so those devices my customer built and be selling to, I found that close to 20% of the users come from the United States, around 30% come from Europe, 15% come from China, and 16% come from out of China in Asia, and 12% come from Latin America. And I still have 5% come from Africa and the Middle East. So it's quite widespread out. And it showed us that the IoT can really help people to make their life easier. So it will be the common demand for the people life.
I was interested in your latest earnings that you had at the end of last year, that in the call it did come up a few times about this softer demand you're expecting for the fourth quarter, which I found a little surprising, just given that there's usually a seasonality factor attached to fourth quarter demand as well. So how did that actually pan out, that period, and what is your expectation for 2026? Yeah,
I think that eventually the Q4 will comply with what we expected. Will be a kind of the soft term because of the macro economy. We'll find that will be a lot of challenge and intensity through that. But in 2026, we found that we will be a rebounding year. The first one is that most of the companies, including my customers, right, people cannot survive in a very conservative level of operation anymore. People still, the nature is grow the business, so looking for to expand. And the second one is that looking around for the CES, we found we have more and more categories which don't have the AIoT before, but they're starting to embrace the AI into their own applications. So which means that we open more new doors and have a larger total addressable market.
So what would be your prediction then in terms of growth, in percentage terms? How much are you expecting to expand this year?
I think that for this year, we're looking for to have a more decent growth. So like we expected at the beginning of the 2025, so it will be a good double-digit number there.
A double-digit growth you're expecting for 2026. Okay, let's talk then about navigating some of the issues, though, because tariffs has been a big one, and you've spoken a bit about geopolitical uncertainties. Do you see that having a bearing on Tuya this year?
I think that tariffs is always challenged. We want to try to do the international business, right, because it's adding cost. But the most problem is not about the cost, it's about whether you have a stable cost. So I think that for the 2025, the most challenging part is that you have a dynamic momentum that people are not sure what eventually the cost is going to look like. And so finally, we spend a couple of quarters across different countries, right? We have the segment for most of the countries, and then people know that, okay, what will be the next year cost going to look like? How can we set the price? And then people know what to do with that.
You're looking to repurchase up to 10% of shares that have been issued in a share buyback program that you just recently announced. Given the size of the opportunity, and you're saying that you can see that big growth this year, why are you looking at a share buyback now or repurchase now as opposed to more aggressively spending on R&D, for instance?
I think the first one, we have a deeper pocket, even exit all the buybacks, I still have enough capital to invest on my R&D, invest on my new innovations. So that's the first one. And the second one, that the buyback is show that we think that right now the share price is under-evaluated. I mean, based on what my business model looks like and what the future is going to be. So the buybacks that we think will be, on the financial side, will be valuable for the company to increase my ROE. But then try to balance on that because the buybacks, people understand that they're going to reduce the free flow. So we try to balance the liquidity and the right ROE of the overall company.
If you think the share price is undervalued, what is the fair price, do you think, or where do you think it should actually be sitting?
Oh gosh, I think that's if you think about that, if we manage to maintain a very good growing speed with a very good financial models about the profitabilities, and also on the right now the market, I mean the sector we're in right now is AI hardware. I think that's you can easily find the right comparables on that part.